Investing for Beginners. Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. Want to start investing but don't know how to invest and where to start? Well, investing is not so intimidating as most of us would think. It's pretty simple, and it's not limited to some people. It's for all. You can invest regardless of your age or how much you want to invest. Investing can be overwhelming if you invest carefully and take the right steps. It will eventually help you so that your money can work for you. Not only that you can be safe from the effects of inflation, but also you can become financially independent. So, if you are a beginner and are looking to start investing, you are in the right place, as this video is going to help you and it will be a guide to kickstart your investing journey as a beginner. Continue watching the video until the end to get all the insights about investing. To start investing, the first thing is to understand how it works. You don't have to learn and understand all the theories. Instead, if you cover the key points like how much money you require to invest, identifying what kind of investor you are, and choosing the right investment account type with gauging the risk tolerance, you are good to go. So, let's start by understanding how exactly investing works. The investments in capital markets are generally purchasing and holding investment securities, like mutual funds, stocks, or bonds, which can surpass inflation with time. In simple words, it is a method to put your money into work and you get back more worth than it has today. For instance, if an investor purchases and holds some stocks, the money they invest can increase by stock dividends, which are payments to shareholders. These payments can come in the form of additional shares of stocks, and, with the help of price appreciation, the prices of stocks will grow over time. And these returns that investors get also have a compounding effect. Moreover, it is important to understand the difference between savings and investments. Although the purpose of both methods is to set aside money for the future, savings are different from investments. In savings, you save money with low interest-bearing accounts, that too for the short term. However, investing includes making wealth for long terms, like for your retirement, with more volatile assets that contain higher risks but can offer great returns. When should you start investing? Well, the earlier you start investing, the better it is. When you start investing early, you get more chances in the long run. You also get the compound interest working in your favor. You can start investing regardless of your age. However, the best time to start is when you think you are financially ready. If you think you are matching the following necessary points, such as understanding the basics of investing, setting aside money for emergencies, and having monthly debt payments of less than 20% of your income, then you can start investing. How much money is required to start investing? Generally, it depends on the type of investment account you choose, and also depends on the kind of investment you want to purchase. So, you can begin investing with even $5 or $10, or can be more than $3,000 according to your budget. To give you an idea, if you are looking to invest in your employer's 401k plan, then you can start with as little as 1% of your income. But if you invest in mutual funds with a brokerage account, then you may have to make an initial investment starting from $100 to maybe even $3,000 or more. Now we know how investing works, when to start, and how much we require. Let's look at the 6 simple steps that will help you start investing. However, these are general steps you can follow as a beginner, and you can also customize them according to your requirements and objectives. It involves setting your goals, identifying your investment type, and picking the right brokerage for your portfolio to reach your financial objectives. Step 1. Set up your goals. Before starting or buying your first investment, you should have made goals and objectives for your retirement or college savings. Also, create an estimated timeline that will assist you in knowing how much time you require to achieve your goals. After that, you will be able to pick the right account type for your investments. There is a brilliant strategy known as SMART, and it is pretty smart if you make your goals according to the SMART strategy. It stands for specific, measurable, achievable, realistic, and time-bound. For instance, if you want to reach the $1 million mark for your retirement through investments, Investing $300 every month, which will have an average of 8% return for 40 years, is a smart approach to achieving your financial goal. Enjoying till now? Please hit the like button, share and comment, and yes, keep watching. Step 2. Find out what type of investor you are. Before choosing the type of investment for your portfolio, it is important to know what type of investor you are. Therefore, you have to measure the tolerance for risk that you can bear. Determine whether you want to adopt an active or passive approach. Risk tolerance is calculating how much risk you can take with your investments. For instance, your risk tolerance is high and you are comfortable accepting higher risks with the possibility of getting and losing high returns on investments. However, if your risk tolerance is averse, then you will be comfortable with fewer risk factors, and that will eventually result in lower returns. After calculating the risk, you have to understand how much money you can invest. In other words, it is the amount of risk that you can objectively bear while investing. Then comes knowing that you want to invest actively or passively. Well, this decision depends on your preference or style. In the case of active investing, you have to pick stocks or other investments actively to invest. Also, you have to actively manage the investments to get desired results. But passive investment is sort of a buy and hold approach and has a passive investment selection like index funds. So, this part of the investment is crucial before you choose the type of account or broker. You should understand your personal preference, and you can also take the assistance of a financial planner or investment advisor if you're confused at this stage. Step 3. Choose your investment account. Well, picking the right type of investment account is essential, as picking the best investment type, like bonds or stocks, for your portfolio. This depends on several key factors, like income, taxation, or whether you are offered an employer's investment account or not. For most beginners, a traditional 401k by employers is the best way to invest, because mostly these plans offer similar benefits and features. However, if you want an alternative or supplemental account to 401k, an IRA account can be a good choice. This account can benefit investors who are looking for a lower tax bracket when taking withdrawals after retirement. In addition, a taxable brokerage account comes with no penalties for withdrawals, no contribution limits, and offers better flexibility than other accounts. Step 4. Choose the right platform. For investing, you have to choose the right firm or platform that assists you in buying and trading. This is also called picking the right advisor or a broker service. You can choose between a robo-advisor, a full-service broker, or a discount online broker for your investment needs. Well, if you are just starting with investments, then robo-advisor is the best option. This is a software-based platform that will calculate your risk tolerance and period by asking a few questions. Then, it will find the best investment for you. But you can also choose a full-service broker and can open an account for a fee. Typically, this type of broker charges commissions of sales or trade charges known as a load on mutual funds. However, the discount online brokerage is best for investors who are looking to handle their investment portfolio at a reduced cost. Step 5. Pick your investment options. After measuring your risk tolerance and getting your accounts open, then you have to choose your investment options. Generally, it is a good idea to diversify risk, which means you can own different types of assets in your investment portfolio. Primarily, the investment options are bonds, stocks, cash, ETFs, and mutual funds. The bonds are generally considered fixed income, and they represent debt to a company. And with bonds, an investor becomes a lender who gets interest payment from the company as the bondholder. They are good for investors who have low risk tolerance but have more stable returns. Stocks are also known as equities. Primarily, they represent ownership in any firm or organization, and it allows the investor or the shareholder to receive profits and dividends from a specific company. Stocks are very much feasible for investors with moderate to high risk tolerance on returns. Well, in the case of cash, investors utilize cash in their brokerage accounts to purchase shares of their investment securities. However, an investment portfolio cannot hold over 5% of assets in cash, although some active investors can hold more cash in specific market conditions. Mutual funds, or ETFs, can also be a great investment type for beginners and also for old investors. Because they contain many kinds of securities, like bonds or stocks, in a single package, that's why they provide more convenience and diversification. Moreover, mutual funds allow active or passive management with their many investment securities options. The exchange-traded funds, ETFs, are the funds that can be traded like stocks, and it mirrors the popular market indices. Because ETFs are more specialized in the stock market sector and different kinds of assets like commodity ETFs. Step 6. Deposit funds in your account and manage your portfolio. After going through all the steps, you'll have to deposit funds into your account. Don't worry about your first deposit, but try to add funds regularly to your account. Just like everything needs maintenance or proper management, you should have to monitor your investment portfolio regularly. But if you want to switch to automated portfolio construction, Robo-Advisor can be really helpful in that regard. That's pretty much it for the video. Hope this video will help you get started with investing as a beginner. But make sure you have done proper homework, as investing also comes with the risk of losses. If you take the right steps, then you don't have to worry about that much. In the end, if you have any questions, don't forget to ask in the comments down below. Thank you so much for watching. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya, till the next time.